The Silent Thief and the 11 Fortresses, a journey beyond the dollar. The air in the bank felt heavy, clinical, and deceptively still. Behind the glass partitions, digital numbers flickered on screens, rows of zeros and ones that represented the life's work of thousands. Most people walking through those doors felt a sense of security. They saw a balance and thought, I am safe. But there was a ghost in the room. A phantom that didn't trip any alarms or show up on the security cameras. It's called inflation. Right now, as you read this, a silent predator is eating your savings alive. It doesn't steal your bills, it steals what those bills can do. If your money is sitting in a traditional savings account, it is losing its vitality every single hour. A dollar today is a withered version of the dollar from yesterday. But while the masses watch their purchasing power evaporate, the wealthy are playing a different game. They don't hoard cash. They hoard scarcity. They move their wealth into fortresses, assets that don't just survive the storm of inflation, but actually grow stronger because of it. I'm going to take you on a journey through 11 of these fortresses. Some are forged in the fires of ancient history, others are coated in the digital ether, and a few are so bizarre you'll wonder why you didn't think of them sooner. The Silver Ghost, Palladium. In the shadows of gold's glamour lies a silvery white beast, Palladium. It isn't just a shiny trinket for a vault, it is the hidden lung of the modern world. Think about the air we breathe. Every internal combustion engine produced today requires a catalytic converter to scrub toxic gases. Palladium is the critical ingredient. It is rarer than gold, rarer than platinum, and mined almost exclusively in just two places on Earth, Russia and South Africa. When the world's currencies weaken, industrial demand for this tech metal doesn't stop. In fact, as mining costs rise with inflation, the price of the metal usually explodes. It has touched peaks over $3,000 per ounce, quietly outperforming almost every major index over the last 2 decades. It is for the investor who wants the weight of a precious metal with the engine of industrial necessity. 10. The Mechanical Echo, Collectible Firearms. This isn't about stockpiling for a doomsday scenario, it's about mechanical history. Imagine a World War II Luger or an 1873 Winchester rifle. These aren't just tools, they are limited edition sculptures of steel and wood. Wealthy collectors pay staggering sums for provenance, the story of who held the weapon and where it saw action. Because they aren't making any more 19th century antiques, the supply is locked in time. In the 1980s, a Colt Python might have cost $600. Today, that same piece of engineering can fetch $5,000 or more. They are tangible, functional, and impossible to print or debase. The canvas vault, fine art. For centuries, the world's elite have fled to art when the streets got messy. Why? Because a Picasso doesn't care about the Federal Reserve's interest rates. Fine art has a zero correlation with the stock market. When everything else is crashing, a masterpiece remains a masterpiece. Culturally significant pieces are the ultimate hedge because there is only one of them. While you might not have $50 million for a Monet, the rise of fractional ownership means you can now own a brick of a masterpiece. It is the most beautiful way to hide your wealth from the eroding power of the bank. The mathematical absolute, Bitcoin. In a world of infinite money printing, the only antidote is mathematical finality. Enter Bitcoin. There will only ever be 21 million. Period. No king, no president, and no central bank can change that code. It is the first time in human history we have discovered absolute scarcity. While the price swings like a pendulum, the zoom-out view tells the real story. It has outpaced inflation more aggressively than any asset in the history of finance over the last decade. It is digital gold for a digital age, a way to teleport your wealth across time and space without a middleman taking a cut. The world's computer, Ethereum. If Bitcoin is the vault, Ethereum is the city being built around it. It isn't just a coin, it's the infrastructure of the new internet. Ethereum runs smart contracts, automated agreements that don't need lawyers. As the world moves toward decentralized finance, DeFi, the demand for Ethereum's gas to run these apps increases. Since a recent upgrade, the network now burns a portion of its supply with every transaction. In high usage periods, Ethereum actually becomes deflationary. You aren't just holding a currency, you're holding a stake in the world's next operating system. The mother of all assets, agricultural land. They aren't making more of it. Those words, famously attributed to Mark Twain, remain the ultimate investment thesis. Agricultural land is the foundation of human survival. When inflation hits the grocery store, it starts at the farm. If you own the soil, you own the source. Over the last 30 years, US farmland has returned roughly 11% annually with lower volatility than the SP 500. It provides a double whammy: the land itself appreciates, and the yield, the crops, pays you an income. It is the quietest, most dignified way to stay wealthy for generations. The blue gold, water rights. This is perhaps the most mysterious and strategic asset on the list. In many parts of the world, the right to use the water flowing under or over a piece of land is sold separately. As the climate shifts and populations grow, water is becoming more valuable than oil. You can live without a phone, without a car, and even without a home, but you cannot live without water. Investors are now buying senior water rights in arid regions, leasing that water back to cities and massive farms. It is a bet on the one thing that will never go out of style: survival. The plastic gold, retired Lego sets. You might laugh, but the numbers won't. Studies from top economics universities have found that retired Lego sets outpace gold, stocks, and bonds. The secret is nostalgia plus shelf life. When Lego retires a set, like the Star Wars Millennium Falcon or the Taj Mahal, the supply is cut off forever. But the children who love those sets grow up into adults with high-paying jobs and a deep desire to reclaim their childhood. A set bought for $150 10 years ago can easily sell for $2,500 today, provided the box is still sealed. It is the ultimate strange hedge for the patient collector. The liquid time capsule, rare whiskey. Whiskey is one of the few assets where the supply is literally being drunk every day. A 25-year-old Macallan takes exactly 25 years of waiting to produce. You cannot print aged whiskey. As the emerging middle class in Asia and elsewhere develops a taste for high-end Scotch and Japanese whiskey, the world's remaining bottles are disappearing. Unlike wine, whiskey is hardy. It doesn't spoil easily. It is an asset that literally gets better and rarer with every passing year. The wrist-bound bank, vintage watches. A Rolex Submariner or a Patek Philippe Nautilus is more than a timepiece. It is a wearable bank account. During times of hyperinflation or political instability, the wealthy have always used high-end watches to move their wealth across borders. They are mechanically complex, impossible to replicate by printing money, and they carry a global brand value that is recognized in every corner of the globe. A vintage Rolex bought in the 1970s for $300 can be worth $30,000 today. It is the most stylish way to defeat the silent thief. The leveraged king, residential real estate. We end with the classic, but with a twist. Residential rental property is the king of inflation hedges because of a magic word: leverage. If you buy a $200,000 house with $40,000 of your own money, and inflation causes the house value to rise by 5%, you didn't just make 5% on your money. You made $10,000 on a $40,000 investment. That's a 25% return. Meanwhile, as inflation pushes up wages, you can raise the rent. But your biggest expense, the fixed-rate mortgage, stays exactly the same. You are effectively paying back your debt with cheaper dollars while your asset and income grow with the expensive ones. Your next step, choosing your fortress. The dollar in your pocket is a melting ice cube. The goal isn't to hold the ice, but to trade it for something that won't melt. You don't need millions to start. You can buy a fraction of a Bitcoin, a limited Lego set, or a single bottle of rare whiskey. The key is to shift your mindset from a consumer to a custodian. Would you like me to create a specific action plan for one of these levels, starting with either a $1,000 budget or a $50,000 budget?